This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We have seen corn get a nice relief rally here over the last week, now pressing up against significant technical resistance. For the pocket, we're looking at 366 to 369.5 is going to be pivotal as we look to round out the week. This pocket represents the breakdown point from the August 12th USDA report, the 50-day moving average, and the recent top end of the range. Now, we do have a USDA report tomorrow morning. It's going to be grain stock, so this could influence things and change money flow on the chart as we round out the week. If we see a conviction close out above resistance, perhaps we see another 10 cents over the next week. With that said, from a risk-reward standpoint, we like being a seller in that resistance pocket. On the bottom side, 355.5 is the first line in the sand that the bears want to see a close back below. If they can achieve that to round out the week, I think we start to see funds pile back in to the sell side. As we know, this big crop is really getting bigger as we continue on through harvest. Now, moving over to the soybeans, same type of story. We're kind of up here against the top end of recent resistance. 863 to 870 is the 50-day moving average, as well as a key retracement on the year. If the bulls cannot chew through here, I think that we start to see sellers step back in at a better price. Now, the obvious pivot point for the soybean contract is going to be 850. If we see a break and close back below that level, I think that it's a green light for additional selling pressure to come into the market. So we have had some friendly export news over the past week with exports Mexico and some news regarding Argentina. So that is a little bit of a silver lining. If that becomes more of a trend, perhaps the bulls have a little bit more of a hope over the intermediate term. But for right now, the bears are still in control from the technical standpoint. Wrapping things up with the wheat market. Wheat failed to get out above technical resistance on a closing basis, which we have listed as 523.5 to 526. This pocket represents a 200-day moving average, as well as a key Fibonacci retracement on the year. This is an excellent selling opportunity and really followed the trend of lower highs and lower lows. So we marked those lower highs, and I think lower lows are still in the cards. Tomorrow's USDA report has a chance to change that, but right now, from the technical standpoint, bears are in control. 510, a break and close below there, takes us back below that psychologically significant $5 handle, and eventually I think makes new lows. A lot of support coming in near 490. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.